Hey everyone, I hope you're well. Welcome back to Kyle's Financial News. I am your host, Kyle. Today's date is June 14th, 2024. Not a lot going on in markets today. We're just kind of hovering right below or at all-time highs, mostly across the board for indexes. A couple stocks really still performing well. Apple, Adobe, some of those big earners that posted this week. And Apple's really just been performing well from their WWDC conference that's been going on all week. And I believe that ended today. Tesla, Elon got his pay package approved. So Elon is looking to have a significant increase in his ownership of Tesla. And with that, much more control over what kind of say-so he has and is able to push through. I wanted to circle back around to the FOMC and some of Jerome Powell's comments on Wednesday. So inflation is coming down just ever so slightly continuously, which is good. Unemployment is ticking up just ever so slightly, which for the general populace is not ideal. But in terms of fighting inflation, it's good. Unemployment rising just a little bit is going to help just cut into that consumer spending. People will be a little bit more hesitant to go out and splurge on unnecessary items and expenses, and they'll be focused on trying to get another job or renew their skill set or just preserve what they still have in savings. So 2% yearly target. We are at 3.3% currently. It's going to be a hard fight to get from 3.3% down to 2%. I mean, the numbers themselves are very close to each other, sure, but you're talking about over a 50% decrease in the current inflation rate. So lots of work still for the Federal Reserve to be doing. And with that, Jerome Powell is not really wanting to indicate whether or not there will be a interest rate lowering or hiking in the near future. So originally, bets and wagers were kind of around 2 to 3 hikes before, 2 to 3 decreases before the end of the year. And now the plot graphs have kind of narrowed in on we might hopefully get 1 decrease before the end of the year. I think Jerome Powell is trying to bite his tongue in saying that there won't be any decreases before the end of the year. And I know a lot of people are banking on it. Some people, I mentioned this in another video, there seems to be a lot of online chatter about how it's going to be related to elections and politics, and I don't really necessarily see that. Jerome Powell was put in office during the Trump administration, and he worked all through the Biden administration, and now it's up for grabs again, be it Trump or Biden again. He'll probably continue to do another 4 years. So I don't see a political bias there on Jerome Powell's side. I mean, he helped do the printing, or he was the one to start the printing process, added $4.5 trillion to the Federal Reserve's balance sheet, and he's now working to undo that. So experts think we're going to hover around the high 6s, low $7 trillion on the Federal Reserve's balance sheet for a while. So we might see the monthly kind of unwinding of their balance sheet slow down a little bit, but we will just have to keep an eye out for that. Retailers such as Walmart, Target, Walgreens are starting to cut prices on thousands of everyday items. They're not doing this just to be nice. Everybody who sells anything in a capitalist economy wants to charge the highest price they can get. These are for-profit companies. They're in it for profit. They're not doing charity work here. People are unfortunately just starting to really feel that pinch, whether it's because their savings are now finally depleted or because gas and food and mandatory expenses are dwindling on them a little bit too much. Supply and demand is all that's going on here. It's just people are exercising less demand. They're starting to really be picky about the things that they do need and the things that they don't need. I would not be surprised to start seeing this in some of the subscription-based categories, such as, just as an example, Netflix, or probably not Disney Plus. I know people and their kids are going to want to maintain that at all costs for their own sanity. And what else? I mean, you have food delivery services, you have food mail services, you just got to think of some of those kind of extra things that sure save people time and is worth the money when the money is freely flowing around and available. But once people start to kind of really focus on where their dollar is going, you got to keep an eye out for some of those services that consumers are going to be looking to get away from in the meantime. So yeah, savings rates have dropped quite a bit from COVID. During COVID and prior, they were about 7% of an individual's income and has now dropped to about 3.6. So people are finding it difficult to set money aside. If you do have savings pretty well established, I would advocate for only trying as hard as possible to not have to touch it, letting it sit in a high yield interest savings account if possible, and letting it just kind of let it grow a little bit and hedge itself against inflation that way. Economists are thinking that the economy will continue to grow for the remainder of the year. Goldman Sachs, for instance, expects GDP growth of about 2% for the fourth quarter of 2024. And if we are able to get a federal interest rate cut before the end of the year, that will certainly help kind of get the consumer spending flowing again too. So we'll just have to see how future data continues to come out. The Federal Reserve was not too willing to share insights as to whether or not we were going to for sure see a interest rate decrease or not in the near future. And I think they're going to continue to try to keep that language pretty vague, or at least as vague as possible, until they are very confident that they can have a decrease in the interest rate and not have inflation start to tick back upwards. That will really destabilize the remaining faith in the Federal Reserve on their ability to have interest rates and inflation under control. When they start bouncing around and trying to jerk levers back and forth, trying to, get inflation under control, it really starts to kind of reveal how maybe little thought out or little understanding that they even have about the things and the implications of what they're doing. So yeah, we'll stay tuned on that. Hope you all have a great weekend. We'll check in again Monday for more news then. And thank you so much for watching. Please consider liking and subscribing. It means so much to me as a brand new creator. That support is just fantastic. Thanks for watching again. Catch you later.